Hello, everyone. In previous lecture, we have seen these, they prepare their cash flow statement, and we have seen the methods of cash flow statement, that is direct and indirect method. And after that, we have started learning the format of cash flow statement. There we have discussed that we have to record three activities in cash flow statement. First one is operating activity, second is activity, and third is financing activity. And after that, we have started operating activity. And in that activity, we have seen some adjustment. Now, further, we will continue these activities, that is operating activity. So just let me share the file. Yeah. So if you see here, so we have started with operating activity. Here we have seen the very first transaction which we will be recording in operating activity is profit before tax. So we will start with profit before tax, and we will be taking this profit before tax from profit and loss account. Right. After that, we have to adjust non-cash transaction. We have seen what kind of non-cash transactions we record in P&L account. So first is depreciation, second is provision, third is deferred expenditure, writing off. There could be several other non-cash transactions which we have to add back. If there are some non-cash incomes which we have recorded, so we have to reduce those non-cash incomes. Now, after that, if you see, we also adjust other activity transaction. So if company is earning interest income is not a part of operating activity. It's a part of investment activity. So we show interest income in P&L account, and that has been adjusted in PBT, profit before tax. So that is the reason we are reducing interest income. And what we will do, we will transfer this interest income in investing activity, right? So further, I will show you these transactions. Similarly, dividend income is not a part of operating activity. It's a part of financing activity, right? So we will discuss that what transaction we record in investing and financing activity. After that, if company is paying any interest, so interest payment is a part of investing activity, financing activity. It's not a part of operating activity. So we will add back. Interest payment will be recorded as an expense in P&L account, and we have reduced in P&L account, and now we are adding back to find out cash profit. Also, if there is loss on sale of asset, or gain on sale of asset is not a part of operating activity. It will be a part of investing activity. So loss will be added back and gain will be reduced. And now third item which we have to learn is changes in working capital. I have told you about working capital, but we have not discussed in detail. So now we will see what is changes in working capital in detail right now in this session. So what I will do, I will write down the items, and after that I will be discussing more about these items. So what we have to do, we have to add increase in liability. We will be adding back increase, we will be adding increase in current liability, and also we will be adding decrease in current assets. Right? Decrease in current assets. So increase in current liability means we will compare 2 years data. Right here, what we will do, we will compare 2-year data. Now, how you will find out these 2 years data? From financial statement in balance sheet, you will get the 2 years data. Right. So here, what you will prepare cash flow statement if there is any increase in current liability. So to find out cash profit, what we do, we add back, we add increase in current liability. I'm giving you one example. Right. I'm taking example overdraft in balance sheet in current liability side. What we do, we record or we show overdraft. We record or we show overdraft. Right. Now let's suppose in year 2020, company's over liability is 10,000. And now in year 2021, company's overdraft liability is 12,000. Now, in this case, if you see, if current liability is increasing, what does it mean? That company has borrowed more loan from bank. And if company is borrowing more loan from bank, so definitely there will be increase in cash, right? Previously has received 10,000 and now liability is 12,000. It means company has additionally received 2,000 rupees from bank, right? So whenever there is increase in liability, we will be adding that liability, that increase in cash flow statement in operating activity. Similarly, when there is decrease in current asset, now I will take the example of current asset, right? We record debtors or stock in balance sheet, right? So let's suppose in here 2020, the value of stock was 20,000 rupees. Value of stock was almost 20,000. Now the value of stock in year 2021 is 16,000. What does it shows? That company was holding a stock of 20,000 rupees, and now in this year or maybe in year 2020, what company has done? Company has sold stock of rupees 4,000 to the customers. And if company is selling stock to the customers, then it means that company has received cash, right? So that is the reason whenever current assets reduce, we add that amount in cash flow statement. So this 4,000 will be added, this 2,000 will be added. What we have to reduce here, whenever there is decrease in current liability, whenever there is decrease in current liability, that is to be reduced, or whenever there is increase in current asset, we have to reduce. Why I'm saying that decrease in current liability will reduce? I will be taking the same example. Here company has taken OD, which is current liability for us. In year 2020, OD balance was 10,000. Now in year 2021, let's suppose OD balance is 4,000. So what does it mean? It means that company has paid 6,000 rupees to the bank. So there will be outflow of cash, right? In this case, if there is outflow of cash, you will be reducing that amount, because we have to find out actual cash position. If we are paying some amount, so there will be outflow of cash, right? So we have to reduce that amount. And similarly, whenever there is increase in current asset, so we will be reducing that amount also. Now let's suppose in year 2020, we were having stock of 20,000 rupees, right? This example I'm continuing. We were having a stock of 20,000 rupees, right? Now, if you see here, this stock value is increasing. Let's suppose the stock value is now 25,000 rupees. What does it shows? It shows that company has purchased additional stock of 5,000 rupees. And if company is buying additional stock of 5,000 rupees, definitely there will be cash outflow, right? So in this case, there will be cash outflow. So we have to reduce this amount from our operating activity, right? After adjusting all the above transactions, what we will get here, we will get cash flow from operating activity. Here we will get cash flow from operating activity before tax adjustment. Right? Now, in profit and loss account, we see that company tax also, right? So before tax adjustment. Now what we will do here, after adjusting all the transactions, from here we will start and we will reduce these transactions as we have seen. Now get here cash flow from operating activity before tax adjustment. And now last adjustment will be tax payment. Largest adjustment will be tax payment, and we will get the cash flow from operating activity. So here we will reduce tax payment, and here we will get the cash profit of organization, right? So this is going to be cash flow from operating activity. Further, we will take cases and examples, and we will discuss about investing and financing activity in coming time. Thank you.